Hello and welcome back to FX Limit, your go-to channel for demystifying Forex trading strategies. Today, we're diving into a powerful tool in technical analysis, the MACD crossover strategy. This is an essential technique for both beginner and seasoned traders, helping you generate reliable buy and sell signals. So, buckle up, and let's get into the world of MACD. First off, what exactly is MACD? It stands for Moving Average Convergence Divergence, a mouthful, I know, but it's simpler than it sounds. MACD is a trend-following momentum indicator that shows the relationship between two moving averages of a currency pair's price. It consists of two lines, the MACD line, which is the difference between the 26-day and 12-day exponential moving averages, and the signal line, which is the 9-day EMA of the MACD line. Now, why is MACD so crucial in Forex trading? It's because it helps traders identify potential buy and sell opportunities around support and resistance levels. The magic happens in the crossover. A bullish crossover occurs when the MACD line crosses above the signal line, signaling a potential buying opportunity. Conversely, a bearish crossover happens when the MACD line crosses below the signal line, indicating a potential selling point. But wait, it's not just about crossing lines. We need to consider the MACD histogram too. This is the bar graph that shows the difference between the MACD and signal lines. When the bars move above the zero line, it indicates bullish momentum. When they move below, it signals bearish momentum. Let's talk strategy. How can you effectively use MACD crossovers to generate buy and sell signals? First, look for a currency pair exhibiting a strong trend. The MACD is most effective in trending markets. For a buy signal, wait for the MACD line to cross above the signal line. This indicates rising bullish momentum. However, to avoid false signals, it's wise to wait for confirmation. This could be an increase in the MACD histogram or additional candlestick patterns indicating an upward trend. On the flip side, for a sell signal, watch for the MACD line to cross below the signal line, signaling increasing bearish momentum. Again, wait for confirmation, like a growing negative histogram or bearish candlestick patterns. Remember, the key to success with the MACD crossover strategy is patience and confirmation. Don't jump the gun on a crossover. Wait for the market to give you a clear signal. Also, keep an eye on news and market events as they can drastically affect currency movements. Let's address a common question. How accurate is the MACD crossover strategy? Well, no technical analysis tool is foolproof. MACD is a fantastic indicator, but it has its limitations, especially in sideways or choppy markets. That's why combining MACD with other indicators like RSI or Bollinger Bands can enhance its effectiveness. Lastly, practice makes perfect. Use a demo trading account to test out the MACD crossover strategy. Experiment with different currency pairs and timeframes. Find what works best for your trading style and risk tolerance. In summary, the MACD crossover strategy is a powerful tool in Forex trading, helping you identify potential buy and sell points through a combination of momentum and trend-following indicators. But remember, it's just one tool in your trading arsenal. Combine it with other technical indicators and fundamental analysis for the best results. That's it for today's session at FX Limit. I hope this insight into the MACD crossover strategy empowers your trading journey. Don't forget to like, share, and subscribe for more insightful Forex trading strategies. Keep trading smart, and see you in the next video.